Now, Rebosis Property Fund plans to acquire the entire B-linked unit capital of Ascension Properties that it does not already own. The CEO of Rebosis, Sisa Ngebulana, joins us now for more. Sisa, thank you for making the time to join us. Firstly, just talk to us about your broader strategy and how this particular move to go back and acquire what you don't already own of those B-linked units fits into that strategy.
So if you, thanks, Nazibut. If you recall back last year, we acquired the asset manager of Ascension. So we incorporated that into our business. We've been managing Ascension since it's almost 13 months now. Good asset base. We've done good improvements with the team. The team has joined our team and has really just done well with our team, blended with our team quite nicely. So we acquired about 16% last year when we our first move into Ascension. And we had a good cooperation agreement with the team of Ascension, the founders. We then had another suitor for Ascension, and there was a tripartite merger talk, and we terminated those merger talks in June last year. We then acquired the other 16% from the other suitor, and that made up 32% of the issued share capital of Ascension. It's always been our intention to actually assume the whole entire issued share capital of Ascension into Rebosis. So that's really, it's a culmination of all of that. That's
and
really led to that. For us, Ascension is a great company. It's got, it's a pretty much office-based company. We like they've got good quality underlying assets, about 29 assets. And it fits into our strategy, also diversifies us into the Western Cape, which we don't have as a province in our portfolio currently.
Sisa, when you look at the property industry, so two questions. First one, the economy is not doing well, yet the number of space, the amount of space coming onto the market, specifically in A and premium grade offices and retail, but mainly A and premium, is actually at very, very high levels. Is it just the B grade that are suffering, or people moving up into the A grade, or do you think there's an oversupply? And then the second question relates specifically to what you're doing now. Why hasn't there been more consolidation in the property field in South Africa? You got three gorillas, and then you've got a whole lot of smaller players that, you know, unless you've got 20 billion assets, it's actually not really a viable player in the market. So your answers on those two questions.
Yeah. So Wayne, I think perhaps let's start with your last question.
Yes.
You know, I think there's still room for differentiation in the market, and I think more specialized funds tend to offer the investor something quite unique. And if you look globally, more specialized funds tend to do well, and they tend to rate better because the investor who invests in that kind of stock understands and appreciates the kind of risk and potential upside and the skills in the management team that they tend to, instead of investing in a big conglomerate with the whole mix of properties inside it. So I think there's room in our market for that. So just coming back to oversupply. Yes, there's nodes that are oversupplied. If you look at Sandton's, a lot of oversupply. New offices coming on stream, and you've seen the rise in vacancy as a result of that in the sector. But the kind of office we're in is very unique in a sense. It is not what you find in those nodes. We invest in nodes where there's more demand and where there's critical mass in terms of the size of the buildings. For instance, if you look at Ascension, they've got about 28, 29 properties. Together, we'll have about 47 properties once we have assumed Ascension on about 11 billion rand. So it's really nice suites of assets where tenant, once they've invested in the building, they've invested a lot of money in the building. Yeah. It's hardly almost impossible to move out of the building.
Sisa, no doubt in the last 13 months has given you a very good insight into the kind of value that you can unlock from Ascension. What are you most excited about that's really been the key driver for you to say, this is the time, let's go in now and let's get the rest?
All right, so when we did this last year, Ascension's got a different structure to what we have in terms of their shareholding. They've got A units and B units. So the A units had some challenges, and that's the reason why we didn't proceed with, you could argue that by June last year, we could have moved on with what we're doing now, but we couldn't because there were hurdles along the way, especially on the A unit structure. They've got investors who've invested in that A unit structure, and they wouldn't want to swap that into a normal ordinary share structure. So we had to preserve that, and there were JSE issues and Financial Services Board issues that they had to resolve, and we had signed off from them by end of the year last year, and now that's why we can proceed with those transactions with the Ascension.
What are you most excited about?
I think First of all, it gives us scale, which is quite important for us. We'll have about 11 billion worth of assets and about 8 billion market cap, firmly entrenching us into the mid cap. So from a liquidity perspective, it's good for us. Secondly, it diversifies us into the Western Cape, which is a province we don't have. We have got 4 provinces in terms of diversity, or geographic diversity in our portfolio currently. So it gives us a very nice blend of assets into that. It does increase our office exposure, but our office is very unique in a sense in terms of tenant profile.
When you look at, the overall property market, and you look at the valuations of some of the property stocks now, the yields are sitting down at 6.5%, yet the distributions are growing single digit. Do you think there's any chance we can get a massive leap upward in distributions from the property companies in the next 2 or 3 years? Certainly from what I know, it doesn't seem really possible to get 12-13% distributions, currently sitting at, call it 7-8%. What's your view on that, Sisa?
So there's various factors that go into it, and that's why specialization is very important. If we look at high prop results today, they came in about 11% distribution growth. So you find, for instance, in retail, because you've got the when the economy turns, such as we've seen now with the high prop results, you have the retail outperforming, and the result, because your leases, you've got the base rental plus the upside on the turnover rentals. So you get that upside. So you do find more retail specialized counters. That's why they'll rate better in the market, because they're more specialized and they've got a potential upside, unlike an office with very set escalations. So you always have that. The other kick, obviously, is the gearing. When you have gearing and you only have interest payments, which are flat throughout, your escalations on your rentals do give you a kicker from a distribution perspective. So you do have potential upsides on various fronts. Plus, also, if you do acquisitions which are yield enhancing, that's another kicker for the shareholder.
That's the CEO of Rebosis, Sisa Ngebulana, giving us some insight behind that acquisitive appetite that Rebosis has been demonstrating.